Let's get over to our man, Mr. Tim Wood, folks, as every Tuesday and Thursday. And don't forget, folks, you can get hold of Tim every trading day at ORD, O-R-D, -Oracle, ORCLE.com. That's ORD-Oracle.com. Tim Wood, what's going on, brother?
Actually, they left me behind here. I got out of the market here, I don't know, a week or so ago, and it kept going up. But we'll kind of look where we are right now. You got chart 1 up?
Yes, okay, we'll get that up. Yeah, hey, listen, man, it's a tricky market. The thing that's amazing, I mean, you know, I'm sure we're going to talk about gold, too, but you see that move? That move was pretty spectacular, man.
Yeah, it came out on news, which I'm always, you know, whenever something moves on news, normally that move is kind of ending move. So we'll have to wait and see. But, you know, let's go to chart 1. This is kind of a repeat.
Okay.
Nothing's really changed.
Yep.
But, you know, last February, the market closed, 50% of the market closed above the upper Bollinger Band. And I circled in red circles the times that has happened in the past. And this month's not over yet, but if you look at, we're almost kind of eyeballing that. We're probably 80% above the upper Bollinger Band.
Okay.
So I'm still thinking we're going to get into a consolidation. So it just doesn't really last. You can take this chart back to 1980, and you'll pretty much about 90% of the time, every time you close above the 50% above the upper Bollinger Band, usually the next month is at least a consolidation.
Right.
So I'm still thinking it's probably still going to consolidate here. So let's flip to chart 2.
Okay.
And we talked about this before, and you kind of wait on this chart a little bit. This is the top window is the 10-day RSI. Next window down is the SPX tilt ratio. And so it measures the velocity of that ratio going up and down. When it gets up around plus 70, and earlier on Tuesday, it was only about 67, 68, wasn't to 70. We're now at 74, or 73.72. And normally I always told myself it has to be above 70. I think, well, 67, 68 is close enough. Well, it's not. It really should be above 70.
I see, okay.
So anyhow, all the times going back here, the blue lines shows times when it's at 70 or higher. And so now we're at 70, almost 74. So you got some evidence now that you probably are going to at least stall here short term. And so let's go down because that's the daily chart. So you got now you get it up above 70. You're up almost 74. So let's go to the hourly chart on chart 3.
Okay.
And okay, this is kind of the middle window is the VIX, and the top window is an hour chart. So this is an hour. So we're going, from the monthly to the daily down to the hourly. So this is an hourly chart. And so the top window is the RSI for the VIX. Then right below that is the VIX. Below that is the hourly SPY, and below that, second window up from the bottom, is the hourly percent volume, or Bollinger Band. And below that is a rate of change, a 3-period rate of change for all of this is for the VIX. So what you're doing is you're measuring the acceleration of the VIX, either up or down. So when the VIX goes down too fast, it's actually bearish. If it goes up too fast, it's actually bullish. So anyhow, the VIX really took a dive here over the last couple of days, and the VIX coming in today is below 30. We're at 26.65. And also the percent Bollinger Band did hit below the lower Bollinger Band, and it got down below minus 25. In other words, it fell actually below the lower Bollinger Band. But the bottom one didn't match. But you only need 2 or 3 to line up. So on a short-term basis here, you got acceleration to the VIX to the downside, which is too much goodness, I guess you may. It's just like when the VIX goes up too fast. When the VIX goes down too fast, it's actually bearish for the market. So it really kind of zoomed up. So you're probably at my guess, you're probably hitting a short-term high my guess would be today. I hear the music.
Okay, stay right there, folks. Tim and Tom, we're going to be coming right back. We have the Dow up 304, NASDAQ up 50, S&P's up 20. We're coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of Basil's educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Tim Wood, Tom O'Brien. We do appreciate you growling and prowling with us out here. We have the Dow Industrials right now up 329. You get the NASDAQ up 60. S&Ps are up 23. And the chart, I have the third chart up, Tim.
All right. So anyhow, I'm thinking this is probably a short-term high here. So
like right where we are right now, you're saying,
but,
right?
You know, it could last several days or something like that.
Yeah.
So let's go to chart 4.
Okay.
So let's flip. Okay, this flips back to the bigger picture. This chart works really pretty well, and this is the weekly. The SPY. The top window is a 14-period RSI on the weekly time frame. So it's actually a momentum chart, and so it measures momentum. So if this chart goes back to 2009, but when the RSI on the weekly time frame gets to 80 to 85, has to be in that range, which is we're 80.19 right now, so we're in that range. Normally, that's never the final high. The final highs usually have RSI most likely less than 70. You'll see a big divergence in continuity to the upside. But 80 is basically a confirmation that it'll never be the final high. So what that says is, if you do get a pullback, you want to buy the pullback. So I listed all the times in the past with red lines that when the RSI hit 80, a lot of times you get a mild consolidation. Right when you do hit 80 in that vicinity, you get a pullback, then the market goes on and makes higher highs. So it kind of reinforces the idea that this year is going to be an up year, but short term you can see a consolidation. So, but nothing significant. I was hoping to get, the trend we kept. I'm a big guy of panic. Yeah. And the more panic you have, the better it is, and the stronger the bottom. And we really haven't, we had some pullbacks. You got trends a couple of days or 3-4 days ago. You got the 1.26, but didn't really have any downtick readings with it. So I didn't take that trade, and, the market took off. But I'm thinking it needs a little bit more. Like the 10-day trend needs to get up to around 1.2 to really get some energy back into the market where it can start going for a number of weeks. And so I'm hoping this next pullback we may get something like that. 10-day trends coming in right around now is like about 1, maybe 101. It's pretty neutral, not getting a lot of information. Okay. So today, I'd like to see it get up around 1.2.
Right, and today we're at 1.31 again. Now, what gets interesting here, folks, okay? Now, let me ask you this, Tim, right? I know you're looking for the consolidation, and I know we've been higher, but this is almost seems to me like a consolidation. Do you know what I'm saying? Because, we're at highs, right? And if I look at the S&P, I mean, I know we're higher than we were, 3 or 4 weeks ago, but not that much, man. No.
No, that's what I'm hoping, too. And actually, if you do a daily... I don't have a chart to show that, but if you do a daily Bollinger Band on the SPY, we're actually above that Bollinger Band, higher above the Bollinger Band. And a lot of times that really slows down the market. You want it to actually stay right below the upper Bollinger Band and kind of just feed up to it.
No, exactly.
But once you start going above it, which we are right now, we actually closed above it yesterday, and we're 100% above the upper Bollinger Band as we're talking right now.
Yeah, and I have the chart up too, Tim. I just put it up. I know I can see that. And as you look all the way back, that's interesting. Though, if I look back 3 months ago, it went above it, then it just went down, and then just took off again. Interesting. It never.
Yeah, you kind of. It's kind of a momentum study. You kind of, a lot of times you'll hesitate, get back below the mid Bollinger Band, and then you get some nervous, or you get some trend readings pretty high. You get long again, but it's kind of trends up. It's just I think we may see a mild consolidation here. So how much? I got there's a gap way back in February. I know about around February 20th, 21st. Or 22nd, maybe. I thought that gap may get filled, but it didn't even touch it. So, but that may happen later, maybe in September or something.
Well, and what Tim's talking about, folks, when we were talking about this, when this gap appeared, and if you're a bull, it would have been a lot better if this gap got filled prior to now, because the higher we go, this gap's going to get filled, man. I mean, because that's a very large gap for the S&Ps, man. I mean,
yeah, it is. I noticed before, or a lot of times, sometimes after major bottoms, you gap up, and they call them breakaway gaps. Yes. It's coming off of a bottom. Those gaps a lot of times don't even get filled. A lot of people, I got to wait for the gap to fill. Right. But if you find a gap in the middle of a trading range, most of those get filled, and this one's kind of like in the middle of a trading range.
No, it is. It is. So if you think you missed the trend, folks, the bottom line, just be patient. Because it might be September or October, because, that's how it shakes out. So that'll be here before we know it, which is pretty amazing.
All right. Do you want to go on?
Yep, I'm ready.
All right. Chart number 5.
Okay.
Kind of showed this. This is my opinion. This is the chart that defines bull and bear markets for GDX.
Okay.
because it defines the up down volume and advanced decline for GDX, and that's pretty much all it. That's the whole ball of wax for technical analysis for GDX. You got to have volume and you got to have advanced decline. So this is a monthly advanced decline that which see the bottom window is a monthly up down volume for GDX. Second window up is advanced decline for GDX. Bull markets are in progress when both those bottom two indicators are above the mid-Bollinger Band. And so even though the market really hasn't done a lot of damage, it has gone down since 2021, which I think is drawing a head and shoulders bottom here, but it's still not above the mid-Bollinger Band.
Right.
So how do you get above the mid-Bollinger Band? So you got to look at the next chart, which is the weekly up-down volume advanced decline indicators. And for some reason, even though we had a really good rally off of that low we had here, a couple of weeks ago, or actually about a month ago. But so far, both those indicators, which is the up-down, this is on a weekly time frame now, up-down volume advanced decline indicators are still not above the mid-Bollinger Band. So this rally needs to hold here, if not move higher, to start turning some of these charts up.
Right.
So that's the reason why you don't want to fall back here, because it's just going to remain in a kind of doldrum what it's been in for the last, actually, pretty close to a year now. You got some, but I'm thinking we are going to do that because I got some indicators that we showed on your show that are multi-month indicators. We had one on Tuesday we talked about, which is I think it was a weekly RSI for the XAU gold ratio.
Okay, just stay right there. Stay right there. Tim and I are coming right back, folks. We have the Dow Industrials right now trading up 297, Nasdaq's up 42, S&P's up 19. Tim and I are coming right back, folks. Welcome back, folks. Tom O'Brien, Tim Ward, we do appreciate you growling and prowling with us out here. We have the Dow Industrials up 301, Nasdaq's up 46, S&P's are up 20, and we are looking right now at the GDX.
Right, GDX, which is the weekly GDX.
Yep.
And so what we need here is for GDX to actually hold here, if not move higher, to get these indicators back above the mid-Bollinger Bands. And so the weekly and monthly are not there yet. But chart number 7, which is this is the same chart, the up-down volume advanced decline indicators again, and the dailies are above this, and the Bollinger Bands turned up, so the dailies are on a buy signal, but the weeklies and monthlies are not yet.
I see.
So we need, more than anything, I guess it would be fine if the market didn't even move from here, as long as it just stayed here and have time for these indicators to bend up. Obviously, a rally would also do it, but I'm thinking that's what's going to happen. If you remember on Tuesday, we were talking about the weekly RSI for the XAU gold ratio getting below 30.
Yes.
Those signals on that scale are multi-month signals. So, and we got a signal, I think it was in late February or early March on that signal. So I'm thinking we're probably going to at least rally into July. And I'm hoping, if that time frame is accurate, that the monthly, going back to page 5 again, we'll get the monthly back up to mid-Bollinger Band, if not above it. And once we get above it, normally it doesn't really whip through it back and forth. You go back to chart number 5.
Yeah, I have it.
Yeah, and once you get above it or below it, it usually stays there. So it doesn't whip back and forth, bicycle, sell signal, bicycle, like some of these other shorter-term indicators. So once you get above, and plus it's been 3 years in a downtrend, previous times. So chances are, if it gets above there, we've had enough consolidation going sideways. If you look at the top chart, which is GDX chart, we really haven't moved a lot since 2021, more or less. It's gone down to look like it's low as maybe 20, about 20. High has been maybe 35. It's a big range, but on a monthly time frame, that's fairly narrow. So I'm thinking, this sideways move, which I'm going to call it compared to other times on this chart, will finally break out and finally get going, in my opinion, to the upside, because we really can't get any lower on the up-down volume advanced client indicators. We're matching, pretty close to the 16 lows of, if you compare where the price lows of both those indicators are, we're in the vicinity of those lows now, and that was a major bear market from the 2012 to 2016. So price-wise, we're in that region right now.
Yeah, that's what I was just going to ask you, Tim, because it seems to me when we look at that ratio, right? So price-wise is probably up there. We just don't have the up-down volume to go along with it, huh? That's what it seems like. I'm trying to figure that. You know what I'm saying? When you do the ratio.
The ratio, which ratio?
The GDX.
The up-down volume?
Yeah, right. Because price were there, but and this was so cool about the ratios that Tim does, folks. Okay, because it's showing the up-down volume would show you the underlying strength. We know you can get price going both ways, and price is everything. There's no doubt about that. But the bottom line is that if you're pushing price and you don't have the more buyers than sellers, well, guess what, man? It's just a matter of when it's going to pull back. Yeah. Wow. Okay.
Right. But yeah, I just noticed that too, because we got a lot of damage in the market. Because what I'm saying, the up-down volume is back to where it was at the 2016 low, which was the market just took off like a rocket.
Right.
And if you look at the next one higher, at advanced decline, it's not quite didn't touch the 2016 low, but it's pretty much there also.
Yes.
I mean, you really want just when things get too good to be true, they usually are, and when things can't get any worse, which we're kind of in that vicinity right now, according to the up-down volume advanced client indicators, because you're matching the 2016 low.
Right.
I mean, things already have been through a lot of damage, and you basically on a bigger time frame, you've been on a sell signal since 2021.
I know.
You had some bounces short term that lasted, a couple of months or so. But I'm looking for the rally that's going to last, 1 or 2 or 3 or 4 years.
No, I know.
I think we're setting up for that.
You know what's wild too, Tim, that we haven't talked about that much, and I know you know this upside down, but the correlation between, the price of gold, and then the ratio of normally how these gold equities take off versus the actual price of gold. And we haven't had that yet either. I mean, that's I'm sure that's something that's inside of this. But normally, folks, okay, the ratio, if gold's up $10, then, the bottom line is that the equities, you could almost do a 3X on the price of gold, and we haven't seen that, so.
Right, exactly right. That's what if you probably don't have Tuesdays, but we had that chart on the XAU gold ratio.
Yes.
We had that weekly time frame, and we did an RSI study on it, and that gave, that ratio went right through the floor going into that February or early March low, because the RSI got below 30.
Right.
So that's kind of a washed out situation. So we reached extremes to the downside on the monthly RSI for that ratio. And that ratio is turning up now, but they're really in bull markets. Gold stocks usually outperform gold. And right now, so far anyhow, gold's still outperforming gold stocks. We need that ratio to start performing to the upside. And
yes.
we had the selling climax on the RSI on that ratio here recently, so that's washed out. So this move will tell the story.
And you know what I just did, Tim? I just brought up the chart you're talking about from Tuesday, okay? So I have it in front of me. So let's just go through this again for a second. Okay, because this is cool. Go ahead. I brought up that RSI.
Okay, I have to do it by memory because
that's all right. You don't have to go through the chart, but it's just this is pretty cool though. Okay.
Right, but that chart's very important. So when that ratio's going down, gold stocks are underperforming gold.
I get it. Cool. Okay.
Gold stocks. So in bull markets, you can see on that ratio in the past.
Yes.
When that ratio is going up, you were in a bull market.
Oh yeah.
And so we just So we just turned the corner here. We had a washout move in the RSI. That ratio went right through the floor.
Yep.
So things are relatively cheap now. For that bull market to get going, that ratio needs to continue higher.
This is wild, man, because, some of these equities, I mean, they've taken off pretty good for this to be that low. Yeah.
Right. So I'm hoping, since we got the RSI there, and if you notice, you measure that time, I think also that ratio, when it got the minimum upside, that ratio rallied was back to 0.7.
Yep.
That's the reason I got that red line pointed there.
Oh, I see it.
So
Yeah, yes.
At minimum, we go there.
Nice. Huge.
So I'm hoping.
Well, that's a beautiful thing. Tim Ward, it's always a pleasure, pal. You have a great weekend, safe weekend. We look forward to speaking to next Tuesday.
All right. Talk to you then.
Okay, man.
Right.
Stay right there, folks.
Right.
Come right back.